Welcome to Slackin' Off with Brady Slack.
What is going on, everyone? Welcome to another podcast episode of Slackin' Off. I'm your host, Brady Slack. Today we might be doing just a little bit of slacking off because today I have he's become a really good friend and my business partner, Mike Secluna, on the podcast. So we're not working for an hour, but we're going to hash out some conversations. Thanks for being on, Mike. I appreciate it.
Yeah, thanks for having me. I'm excited to just chat about whatever.
Well, it's not like we don't already have 3 or 4 different conversations every day anyways, so at least now maybe we can make something intentional of it, right?
Yeah.
So, if you don't mind, I kind of want to first dive into a little bit of your backstory for the listeners because both of our paths are kind of unconventional, if you will, into finance and tax and accounting as it stands. And listeners will very quickly clue on to the fact that you're not from the U.S. So kind of dive into your backstory just a little bit, how you got to this position, why you decided to work with me a little bit and why you're here now.
Yeah, so I grew up in Australia. That's where I was born and raised. When I meet people, they tell me that they really like my accent, and I just remind them I've been working on my whole life. So it's one of those things you just got to practice. If you practice that long, then you'll have an accent like mine too. So I growing up in Australia, I spent my summers at the beach, and as I got older, I traveled a bit, spent a little bit of time in Utah because of my religious affiliations, and I served a church mission in South Africa. Spent a couple of years there, and really enjoyed that. Learned a lot. And then after I got home, I actually went into university and began studying engineering, mechanical engineering. I really liked the math side of it. This is the really intense math. All that math that you learn in high school that once you leave, you say, I'm never going to use this stuff again. When you study mechanical engineering, that's when you actually use it. All of that dumb stuff that you would never expect to use. So I studied that. When I actually, got towards the end of my degree, I started working at a few different engineering companies just to get some work experience. And I ended up working at a big iron ore company called Fortescue Metals Group in Australia. Did the fly in, fly out job where I was 2 weeks on the job and 1 week home, and just realized it wasn't for me. So once I realized that wasn't for me, I started thinking, what else might I want to do? Initially, my thought was maybe I'll continue to study, get a double degree, finance and accounting. Finance and engineering. But after I delved into it a little more, I said, if I'm going to change my degree and my career, I may as well change country and see how I feel about that. So I moved to Utah. Originally came here just to study, and Brady's heard this story a million times before, but I came to study, found a job, found a wife, and now I'm stuck. That's basically the nuts and bolts of it. So I not long after I got here, while I was still studying, I started working at a startup called Shift Global. Worked with Alex Burge over there and Norm Skirkovich. He actually was my referral into that company, and they hired me as an accountant to begin with. And after not long, they were like, hey, we actually need someone to do financial projections, and we want help with a little bit more of the strategy side of things. And so I sped up my study, started doing a lot of my own study, took courses online as much as I could, learned as fast as I could. Obviously, I already had quite a lot of skill in Excel from what I'd learned in engineering. And so I got dumped very quickly into a big role, but it taught me a lot. I was able to learn really fast. And so we took that company from a $300,000 company when I came on in its first year to over 15 million in its third year, and quite a profitable company. I think recently I spoke to the CEO and COO, and they're at about almost 50 employees now. So they're really, really growing fast, and it was an awesome company to work at. But I did get to a point after about 3 years that I realized I was doing really well in this role, and I'd learned a lot, but I also had kind of learned as much as I was going to learn from this company and within this company. I knew that I wanted to branch out and have a little bit of experience in other things. Um, Plus, I was doing the 80-hour weeks. Anyone who's been in the accounting or finance world, I'm sure has probably done that somewhere. That's where I was doing it when I was the CFO of Shift Global, and it was rough. It was really rough. I learned a lot from it, but I don't really want to learn that again. I'm done with the 80-hour week kind of stuff. So I'd been looking at jobs, and Brady saw my profile on I can't remember if it was
I
LinkedIn
think it,
or ZipRecruiter
I
or
think it
whatever.
was yeah, I think it was Indeed where I found you.
Yeah, so he sent me a request to apply for the job, and I was like, yeah, whatever. Probably not going to leave this company right now, but I applied anyway. Um, Brady, he got on a call with me, and I had a little bit of look at the company. I saw that it was a tax firm. I'd been reading a ton of books, and I knew that I wanted someone that had the right kind of tax strategy, not a tax accountant that works for the IRS, but a tax accountant that works with me to maximize my savings and increase my wealth over time. So in that call, I asked Brady, have you ever read the book Tax Free Wealth? And he was like, I love that book. Love Tom Wheelwright. I listen to his podcast every day. So at that point, I was like, okay, like this might actually be something that I could be interested in. And then I went and met with Brady and felt good. And I realized I'd have a lot of opportunity to work with different companies and learn a lot more. So yeah, then I moved over to High Country Finance about 2 years ago now. We have grown this company a ton. At that time it was me and Brady and a couple of part timers, and now we have almost 25 employees, and our revenue has significantly grown, but also our processes have adjusted and changed to accommodate what we're actually doing, and it's made a big difference for us. We're providing a much better service today than we did a year ago or even 6 months ago, and we're learning a lot, we're growing a lot, and it's been a really exciting road to go down and pigeonhole ourselves into a few different industries, which there's pros and cons to that, but we've become experts in a couple of industries, and that's been really fun to see that.
So you, both of us have very much been involved in the startup phase of several different organizations. And lots of the listeners are in the startup phase of their organizations. What are some pros and cons in your eyes or based on your experience of that startup phase? Like why why did you decide to leave a startup company to join another startup company? And to be quite honest with you, High Country Finance is still in that startup phase. We're less than 4 years old. There's still lots and lots of growth that we are experiencing. With that comes lots of growing pains. We're not perfect. But why do you want to get back into the startup phase after after you had taken a company through that startup?
Yeah, uh, I remember when I was a teenager, I said I never want to be an entrepreneur because I don't want to have to work till all hours of the night. That's what I thought an entrepreneur was. It was just someone that basically made the same amount of money, if not less, than a working professional, but just worked a lot harder. That just didn't seem very smart to me. I didn't really know many entrepreneurs, um, but when I came to Utah, especially, I started to spend a lot more time with entrepreneurs. If you don't live in Utah, I can tell you right now that you're not going to find a group of entrepreneurs so close together and especially close knit entrepreneurs like you do in Utah. It's incredible the culture that is around Utah that's surrounding anyone that wants to start their own business. If you tell someone you want to start a business, no one's going to shut you down. Everyone's going to be like, that's awesome. Like, in fact, in most cases, they're going to want to jump on board. You actually get a lot of people that tell you that they want to just be a part of everything that you're
Yeah,
building.
be careful with that one.
Yeah, exactly. So, I when I started working at Shift Global, to be honest, it was a bit of divine providence. I just felt really good about working at that company. It just felt like the right thing, and wasn't a ton of risk at that point in time, I didn't have much responsibility. I wasn't married or anything, just a single dude kicking it. And it didn't matter if I made a lot of money or not at that point in time. Once I'd been there for a few years and I'd experienced working with Shift, who also all of their clients are startups. That's, they
Yeah.
work with startups to help source and manufacture products overseas. And so it wasn't just working in Shift as a startup, it was also working with these other companies. And what I realized is I liked working there because I felt like I was a part of each of these different companies. I was helping them grow their company, and it made a huge impact on me as far as feeling that sense of ownership. And I realized how much I enjoyed building something. I I did not enjoy when I worked at Fortescue Metals Group just being a cog in a big machine. And I worked on some pretty cool projects at Fortescue Metals. There was one in particular, really big project. They had an issue with one of their machines that they were working on, and I came up with a solution. Basically, sent it up the ranks, and they were like, "Okay, we'll look at that and think about it." And that was kind of as far as it went, and it was a little demoralizing. It was like I put in a ton of work. I came up with a solution to this, and didn't really mean much in the grand scheme of things. Whereas with these startups, everything that you do matters because it's such a small company. There's so many pivotal things that are going on. You can't just leave large issues like at Fortescue's Metal Group. It was a pretty big issue, but they were like, yeah, well, yeah, we'll get to it when we get to it. You can't do that in a startup. Everything that you do matters.
Yeah.
So I love the day to day, the hustle, the impact that you can have on individual lives and on growing a company. And there's just a lot of excitement there. And I also think my personality I can't imagine being in a company that's not a startup anymore. I think I'd get bored. It wouldn't work
Yeah.
for me.
No, I feel that too. It's funny because we've had kind of similar conversations with a couple other guests on the podcast about some days the thought of just going to a 9 to 5 and collecting a paycheck and then going home and not having to worry about it sounds very nice. There are days where that sounds very nice. But then there are other days where it's like I can't imagine doing anything else. So I understand that completely. I want to touch on one thing just really quickly because I think it highlights things that we've talked about before, other conversations that I've had, or other times where I've made similar comments, and that's a little bit about the schooling. You kind of mentioned the fact that you went through your engineering program, and then you went through maybe the trial of that education or the application of that education to determine whether or not you wanted to pursue engineering. And with finance, you kind of took the opposite approach where you jumped right into it. You had a little bit of background, but you kind of jumped right into it. And then the kind of the furnace of that affliction, if you will, is what made you rise, kind of take the analogy of the cream of the crop, rise into a significant position with Shift being their CFO. Tell me what was that contrast for you and what you had gone through your engineering degree and what you'd gone through what got you into the CFO position, and how are they different? Because I think this is important for listeners to understand that. And again, both of us value education. I don't have anything against learning, knowledge, reading. But when school comes into play, I have a very strong opinion about school and its place in society. But I want to hear what your opinion is about the contrast with your two situations.
Yeah, I have some very strong opinions about this as well, and I could talk your ear off for days about education and learning and the education system. So I in Australia, rather than doing 2 years of generals and then 2 years of your degree, you do 4 years of your degree. So when I went into study engineering, it was 4 years of engineering, just
Okay,
all engineering. Even though I was doing mechanical engineering, I did have a couple of classes that were chemical, electrical, civil, a few other things like that.
sure.
So there was a little bit outside of my specific degree, but it was all engineering, everything. By my final year, I was putting together the reports that were 50 to 100 pages long. Every week, I would have to write a report that was 20 to 25 pages long. And that report would consist of calculations and formulas that were, you know, I would sit down and write out calculations that would be 3 or 4 pages long before you could actually get the answer. It was incredibly difficult math. I learned a lot from it. There's a lot of problem solving that I learned in there. I learned all of, at least in my degree, all of the engineers would, when we had a big project coming up, we'd all get together at the university on the weekend and we'd work on it together. And so it was very collaborative. Sometimes we'd Google to try and find the answers. And if one person found the answer, they'd send it to everyone else. It was a very, not that I would recommend or condone cheating in any way, shape, or form, but when the system is broken, then take advantage of it if you can. So that was my engineering experience. It was tough. I had to work really hard, and it was a lot of math, a lot of understanding core principles of physics and things like that. And then I got into the workforce, and in my time at Fortescue Metals Group, I used a calculation that was about like 3 lines long once. That was it. It's the only time I ever used any of the math that I was doing at engineering. Now, I'm sure there are actually jobs out there that they do use that, but programs do most of the work. You don't actually need to build out all these formulas on your own. Usually you have software that does it for you. So unless you're actually building the software, most people don't actually need to know that. And I started to realize that what I thought engineering was in university was nothing like what it actually was in the real world. And that's why I decided to switch. I felt like I was a glorified contractor. There were these guys out there that they were electricians, they were fitters and turners, and they had all these different experiences. They went to some sort of a schooling to get their not a degree, but like just some
like
sort
a
of a
trade
certificate.
school.
Yeah, trade school, and they do it in 6 months, and these guys knew a lot more than I did. I'd come in and I'd say, well, here's what I think needs to happen, and they'd be like, well, I've been working on this for 7
You're
years, and
wrong.
I can tell you that's not going to work. And I'd be like, okay, well, I'm sorry, my schooling told me this is what's supposed to happen, and so there's a bit of tension between engineers and trade workers often in the mines. So anyway, that was my experience there. My experience with my accounting and finance, like you said, Brady, I jumped into it before I'd finished my study, and because of that, I had to learn a lot faster. So I started going and finding where I could learn that on my own. I got into a website called Udemy. If you haven't heard of Udemy and you want to learn a skill, get on that thing. They have sales all the time. They put their courses 80% off, and you can buy a course for $20. I actually did all of the BYU has accounting courses. They're known all around the US as being one of the best accounting courses in the US. I did all of their accounting courses on Udemy for $20 each. If you want to get educated, I don't think that the only solution nor the best solution is to go to universities. I think that the education system is severely broken. I think that too many people think that all they need to do is go to university and they'll learn everything that they know, but they're not actually active learners. They don't actually want to educate themselves. I may not have the degrees that some people with a CPA, they've gone and got their masters or a PhD or anything like that. I may not have that, but I can tell you that the majority of those people, I've read more books than they have. I've spent more time doing study on my own time and actually applying what I learned. I read 75 books last year, and I would actually challenge anyone who thinks that they are an active learner to go and do that. If you really think that you're someone that cares about educating yourself and learning, go see how many books you can read in a year, and not just can read, but want to read. I didn't do that just because I was trying to, prove a point. I actually enjoy it. I enjoy learning. And that's the difference is a lot of people go to university and they never actually learn to enjoy learning. And I think that's where the system is broken. We're pumping out factory workers. We're not pumping out people that actually know how to think critically and to learn on their own and to come up with solutions.
I remember when I had just recently gotten home from my church mission, and it was actually the first, let's see, when would this have been? So it had to have been either 2017 or to potentially 2018. And it was right before, or it was right as I was making the transition in school from a biology degree to an accounting degree. Because at first I thought I wanted to go be a doctor. And I remember I went to go file my tax returns with my parents, and I went to their tax lady, a lady that my dad had kind of grown up with. And I sat down and I handed her my documents, and I looked at her and I go, "So how do you like your job?" I was just kind of in discovery mode at that point. And she goes, "Well, I love it. I like being able to work with people. I like helping them save money. I like helping them figure out ways to pay fewer taxes to the government." And I thought, "Well, what does it take to do that?" And I'm looking at her and she's typing in my information. She's just taking information from a document, putting it in. And she goes, "Well, if you wanted to do it, you would need to know all of these different forms in the tax software, and you'd need to go to school to get this certification or that certification, and then you'd be able to do it." And I remember asking her, I said, "Well, why do I need to do that if your software does all of that for you?" And she, like, my parents were stumped. She was stumped. She couldn't really answer the question. She goes, "Well, you just need to understand how all of it works on the back end." And I go, "No, I don't. Your software does all that." And again, I was in this transition period, so I went right into accounting. And then probably 7 months later is when I started working for an accounting firm, a tax firm, preparing tax returns. And same deal. They were saying, "Hey, you need to understand this, that, or the other." And I was saying, "No, I don't. The software understands that. All I need to understand are the rules. I need to understand the law. If I can understand the law, the software will tell me what goes on the forms and what needs to be corrected on the forms and how I can make sure that those forms are correct. But if I understand the law, then I'm okay." So anyways, that's how I got jump started in there. And I think I bypassed a lot of the backdoor education that doesn't really provide you with critical thinking to allow you to handle clients who are having questions like, "Hey, I've got $3 million. What should I do with $3 million?" Or, "I've got a company that's generating $25 million in revenue. What should I do with $25 million?" Rather than just like, "Oh, you need to put this on line X of form Y." That's so I kind of bypassed that. But that's no, that's good insight. We kind of jumped around for a minute.
I actually would. I'd like to also comment on that. You talked about people that have a company that's doing 25 million, and that just reminded me, if you go and hire an accountant straight out of university, they've just studied
Yeah,
accounting, maybe they have a CPA or whatever, they haven't learned how to work on a company that's doing 25 million in revenue.
no,
Instead, they're taught how to work on a $1 billion company. Not only that, but they're taught how to work on one specific part of that company. They don't know how to piece everything together. One thing that I've
yeah,
had to do with a lot of my accountants is teach them how to build and read financial reports, the P&L, the balance sheet, the cash flow statement, because they just don't really teach you that in school, nor do you have that experience when you work at these large companies. You go and you work as a revenue accountant, as a GL accountant, as a tax, well, not even just a tax accountant, but an like
just a
an
staff
international imports
accountant.
export.
Yeah,
Yeah, there's just, they don't actually get that full view, and that's, there is no one that teaches you how to be an accountant for a startup, because as an accountant for a startup, you need to know how to do everything and how to bring all of it together and
yeah.
actually make the reports work for that company. Most accountants don't know how to do that.
Well, okay, so this is a really good segue because this is kind of actually where I wanted to go, and I'll preface it with an experience I had the other day. I was in a Zoom meeting the other night for a group that I'm a part of. Shout out to Mitch Matthews and Brody Fawcett. They're our Young Entrepreneurs Club. It's a free group, free Facebook group, and every month they have a guest that kind of dives into their business. They talk about the things that they're doing, and this guest was Chris Gronkowski. It was funny because to all of our listeners, I was talking to Mike about it before, and obviously Mike's from Australia, and I go, "Yeah, it's Chris Gronkowski," and I had to explain to him that, hey, Chris Gronkowski is Rob Gronkowski's brother who plays football for Tom. He's probably arguably one of the best tight ends to have ever played the game, and he goes, "Oh yeah, Gronk." So, anyways, there's a funny story for our listeners. But anyways, Chris Gonkowski has started a water bottle company called Ice Shakers. Shameless plug. It's a fantastic water bottle that does an extremely good job at keeping your water cold and then allowing you the same aspects of like a blender bottle or whatnot. But he was on the call, and one of the things that he said was the one thing that helped him multiply his business by 3 times in 1 year was assigning budgets to specific departments. And one thing that I wanted to highlight with Mike today for all of our listeners so that they could understand how accounting works and what the different roles in accounting are is that would be very hard to do with someone who has just graduated college. And the one thing that I hated about my accounting degree in college was the fact that we were learning how to everything was accrual based. We learned all about accrual accounting rules and for those of you guys who don't understand that, accrual accounting is typically used for organizations that are doing millions and millions and millions of dollars a year. And most companies, I would argue upwards of 85% of companies in the United States are doing less than $50 million a year, maybe even more than that. And so we were not receiving the education needed to be able to service those kinds of companies, but that's the backbone of America. The small business owner, according to the SBA, is, fewer than 500 employees and less than, I think their threshold like 74, 75, I could be wrong, but $75 million in annual revenue. There's 80 to 90% of the companies in America are like that. So what I wanted to do, Mike, is walk through maybe the different roles in accounting, if we can. And then I wanted to walk through a company that's maybe starting in its infancy, what they should look for an accountant, or should they do it themselves? And then as they grow, what thresholds you would consider either bringing something in-house, outsourcing it, what roles they should consider, so that we can kind of set the framework for what a company should look for and what positions it should hire. Can we go ahead and do that?
Yeah, for sure. So I'll start this out by saying that whoever you are, if you own a business and you're listening to this, most likely you're not an accountant. That's not what you study. You may
Right.
be an accountant, but for the most part, you're not an accountant. However, despite you not being an accountant, you're expected to understand how accounting works, how the industry works, who you should hire for, to take care of the accounting in your company. Somehow you've got to figure that out. It's the same thing with a lot of the roles that you outsource, but accounting is very complex, and it's not as easy as like with a lawyer. If you're like, okay, well, I've got this issue with purchasing real estate, I can search for a real estate lawyer. Accounting's not quite as simple as that. So I'm going to break down some major roles in accounting and finance that you will need over the course of your company as you grow, and what you should actually expect from those roles. And then I will also talk about when you should think about hiring those companies. And it's going to be different for everyone, but I'll give you a general idea of what
Right.
potential triggers you might look for to know that it's time for you to hire one of these roles. So
Now, just
the most basic, yeah.
sorry, just a quick disclaimer. I think in this position, a lot of people would say this is not financial. This is financial advice. Like, I am going to put my stamp of approval on this conversation before we even have the conversation. This is why I work with Mike. This is why I value his friendship and his partnership. But this is financial advice, and I would take this information to any accountant that anyone is working with to verify it and make sure that things are being done right. But again, like this conversation that we're about to have, take notes because it's very important for you. Sorry, go ahead.
Yeah, no worries. So the very first role that you will want to consider is a bookkeeper. Now, a bookkeeper is the most basic of basic roles in the accounting and finance industry. A bookkeeper does not need a degree. In fact, the majority of bookkeepers will not have a degree. If you find someone that has an accounting degree that wants to be a bookkeeper, you should be concerned because they're out of their pay grade already. Someone that has an accounting degree should not be doing bookkeeping unless it's on a very large scale and they're getting paid stupid amounts of money to do it.
Yeah.
A bookkeeper is someone that is not going to have a degree. It's a very elementary position to be in. Now, there are two important things to know about a bookkeeper. Number one, because a bookkeeper doesn't have a degree, they don't know a lot of things. They're not supposed to. You shouldn't expect them to know a lot of things. You should expect them to essentially be able to do exactly what you can do in your accounting, So that would be categorize some transactions, maybe print some checks for you to sign, like some very basic things like that, maybe process payroll. You shouldn't expect them to do complex journal entries to give you a forecast of, how much money are we going to have in the bank in a few months or things like that. A lot of people get this wrong. They ask their bookkeeper to do things that a bookkeeper should not be required to do. And unfortunately, a lot of bookkeepers will try. They'll give it a go.
Yeah.
And I'm not saying that a bookkeeper can't do it, but you run a lot of risk in asking your bookkeeper to do things that they're not qualified to do. You should only be hiring a bookkeeper to do things that you yourself can competently do. All right. So that's the first thing to understand about a bookkeeper. The second thing to understand about a bookkeeper is usually a bookkeeper should be managed by an accountant. So the accountant would decide what things are simple enough for a bookkeeper to do. They would give them those tasks, and then the bookkeeper goes ahead and does it, and then the accountant checks it. So again, you still even run a risk if you hire a bookkeeper and you don't have an accountant managing that bookkeeper. I'm
Yeah.
not saying that you can't do it. I'm not saying that if you have a bookkeeper currently that they suck and you shouldn't have them doing the work. But we just spoke to a client yesterday. I just had a call with a client. She's got a bookkeeper. She loves her bookkeeper. The bookkeeper works really hard, but they're hiring us to come in and just work with the bookkeeper to make sure that things are being done correctly. It's not that difficult. Even if you have a full-time in-house bookkeeper, or your mom is doing it, or your friend down the street, if you've got someone doing bookkeeping, at least having an accountant or a CPA look over that work and maybe give a bit of guidance and training to that bookkeeper is important. So again, just to rehash, a bookkeeper isn't supposed to know much, number one. Number two, a bookkeeper should be managed by someone who does know a lot about accounting. So that's the first role, bookkeeper. The second
And
role
really
that you're
quick,
going to want to, yeah.
sorry, really quick. Sorry, I'm going to kind of cut you off here and give my kind of 2 cents as well, just for the business owner. There are lots of people who, we've kind of gone through the Great Resignation in the past 2 years or so, and so you'll find a lot of people that online, here's your financial porn online, if you will, say, hey, start your bookkeeping business today. Please understand that there is good accounting and there is bad accounting, and it is better to have someone who has experience and knowledge or has taken courses to do your bookkeeping, rather than just someone who says, well, yeah, I understand numbers, or I like math, or I want a part-time job to do bookkeeping. Bookkeeping is very simple, and I do agree with Mike. But find someone who has experience with QuickBooks. They might even be QuickBooks certified. I would recommend that someone maybe QuickBooks is QuickBooks certified. But make sure that they have experience in doing it, rather than just like, I want a part-time job kind of deal. That would be my one plug for what you were saying. Sorry, you can go to number two now.
Yeah, agreed. Sorry, I 100% agree with Brady there. I should say, when I say they don't need much knowledge, they do need something. I wouldn't say
Yeah.
go pick someone up from, they've just been working at a restaurant as a waiter, and now you're just going to throw them straight into bookkeeping. You run a lot of risk there. So the second role is going to be an accountant. They may be called a staff accountant. You may call them an accounting manager. There's lots of different roles that we could define this person by, but essentially they are an accountant. So the role of an accountant is to do the more complex things. So they're the ones that should know how to do a journal entry. If you have an amortization schedule on a loan and you want the journal entries to be completed and completed correctly, or at least set up to begin with, an accountant should do that. If you purchase a property and you need to put that property onto your balance sheet and then start the depreciation schedules, an accountant should be able to do that. That's what an accountant's role is. You say, I need this to show up on my reports correctly, and the accountant says, great, I can go ahead and do that. So sure, they can go and do categorization of transactions for you. They can, tell you that when you've just made a purchase at 7-Eleven, that it's most likely going to be gas and fuel. That's fine. They can do that kind of stuff. But they are not the person that is going to be, or that should be doing that every day. That's a bookkeeper. That's what a bookkeeper needs to be doing. They're the person that is going to do the more complex things, and they are also the people that should be managing your bookkeepers. So this person should have some education. Do they have to have an accounting degree? Not necessarily. It's going to help. They should at least have an accounting certificate, I would say. So an accounting certificate is going to give them 6 or 7 courses that will teach them specifically accounting. Because at the end of the day, you don't actually need someone that's done 2 years of generals. 2 years of generals is a waste of time, in my opinion. But you need someone that has that core basic accounting principles under their belt. That's the kind of thing that you're going to be looking for. You would also do well to find someone that has a bit of experience. They've worked in a couple of companies, and if you are a startup, I would look for someone that has worked in a startup. They're
Yeah.
they're more likely going to have the experience and understanding that you need, rather than hiring someone straight out of a large corporation. They will have worked on one specific part of accounting. They're not necessarily going to have the understanding and skill for the whole process across the board. Brady, any comments on that?
No, I mean, before we get too deep into this conversation, this was one thing that did bother me when I jumped into this industry was everyone is so worried about their title. And I remember, like you and I have had conversations about this, right? Everyone wants the next higher title because their pay is based on that next higher title. And I think it's an awful, I think it's an awful way of doing things because you go look at large accounting firms, you go look at the KPMGs or you go look at the DeWalt's, or excuse me, anyways, you go look at these kind of companies, and it's all based on Deloitte. I don't know why I forgot that name. KPMG's, Deloitte. You go look at these big companies, and they all want to get to the level of partner. And I remember when I hired Mike, his title at the previous company he was at was CFO, and I was actually specifically, I personally didn't think we weren't in the position where we were ready to hire for a CFO when we hired Mike. And our problem was Mike didn't want to downgrade to a CFO. And I don't know if you remember this. When we hired you, you asked, can my title be CFO? And really that's just the natural position that you took anyways. So I really didn't care. But I really didn't care because I said, Mike, your title can be the Queen of Sheba. I really don't. And even to this day, for our employees, internally we have titles on email signatures, but really even then we just have roles and we have functions of those roles. I wouldn't even say we emphasize titles. All of our employees, at least they should. If they don't, please send me give me a call so that we can have this conversation. But all of our employees have a knowledge of what they need to do to get paid more, how they can excel in our company, and none of them are related to titles. It's just the performance and the value that they bring to the table. Anyways, and so how this relates to you guys, sorry I kind of went off on a tangent. This relates to your companies in the form of people are going to look for titles. People may look for certificates or degrees, but I would urge you as a business owner to find the value that fits the need you have, not for where your business is, but for where your business is going. That's kind of the only thing I'll add to that.
Yeah, I would agree with that. So then the next role that you're going to talk about is a controller. Now, a controller is an accountant that has more experience and is more focused on accounting strategy than they are on just doing the journal entries and doing the complex tasks. A controller is going to be very highly paid. They're also going to be very highly skilled. Usually, they will have quite a bit of either experience or education or both. If you hire a controller, if you give them the title of controller and you ask them to do things that a controller would do, then I would expect that they have a good amount of experience, a good track record, and some education there that is going to back that up. So a controller in a larger organization, a controller is going to manage the accountants. So they're going to have revenue accountants, GL accountants, staff accountants, cleanup accountants, even tax accountants may even fall under a controller. But a controller's job is to make sure it's in the name that the correct processes and controls, the accounting procedures are put into place. And they would be the ones to teach, train, and advise the accountants underneath them. I would say that for most startups, if you're making less than 50 million in revenue per year, you don't need a controller. You need a good accountant. You need someone that understands those accounting
Yeah,
principles pretty well. And maybe you need someone to come in and review those every now and then. Maybe you need an outside advisor that can help you with those tasks, but you're not going to need a controller. That being said, I see a lot of startups that hire controllers, and I'm usually shocked when I see a controller on the books and I look at how much they're paying that controller, which is usually much less than what a controller would normally ask for, which tells me that this person knows that they're unqualified for the position that they're in.
right.
It does often shock me that people have hired someone in a controller level.
I know the next person that you're going to talk about, and like before we like the next person besides the controller is now your CFO. Now the problem, and in fact we've had this with some clients before, where I don't know if it's the ego of the business owner or they think that their business is in a much different position than they are in, but they'll say we're going to continue to use your services for accounting and bookkeeping, but we're going to bring a CFO in to manage our accounting. Um, and what happens, like Mike has said, is people will bring a CFO into an organization, and the role of a CFO, which we'll dive into, is very, very, very high level. And oftentimes, a CFO is given a very nice salary with options in the company or ownership. That's typically what the CFO role would look like. And so I think the contrast between lots of business owners will hire a bookkeeper too late because they know that they can do the tasks. And a lot of times they will hire a CFO too early because they think they are doing more than they actually are. And those two are very deadly positions to be in. So we can kind of dive into those contrasting positions and how we can avoid those or how we can help.
Yeah. Yeah, so that's exactly right. The next position is a CFO. And the question for you should be, what's the difference between a CFO and a controller? A CFO should have a very good understanding of accounting and accounting principles. They should actually be able to do everything that a controller does. So their role encapsulates a controller. So if you were to hire a CFO and a controller and you were doing less than 50 or 100 million in revenue per year, again, I'd be concerned as to why you need both of those roles at this point in time. However, a CFO does go a step further than a controller. A CFO is not just an accountant. They don't just understand accounting. A CFO also understands finance. So they understand the importance of building not just they understand, but they have built relationships with people in the financial industry, with banks, with vendors that they can then bring into your company. They have that experience there. But on top of that, they have a great amount of skill and understanding of financial projections and analysis. So an accountant's job is to look at today and go in the past. They look at what has happened, they analyze that and say, okay, here's what's happening. Here are the reports. This is what's been going on in the company. A financial projections and analysis analyst or a CFO, their job is to look at everything in the future. They are your crystal ball wielder, if you will. So a CFO should be able to put together complex models as requested by the owners, but also to look at potential issues or potential worries that could occur in the future for the company, and to show the company where those pitfalls may be and help the company understand how they can overcome those pitfalls. A CFO should be very skilled in financial strategy. They should also have a good understanding of how a business should function and be able to advise on processes, not just in the accounting and the finance side of the company, but also on other aspects of the company. A CFO is essentially the analytical and numbers equivalent of a CEO. So you've got to ask yourself, when you hire a CFO, is this person as important as you are as the CEO? That's really what you're looking for in a CFO. And this is where a lot of companies go wrong. They hire a CFO when really what they need is a bookkeeper and an accountant. But the CFO title sounds cool. It's like, oh, we just hired a CFO. They're going to do all this cool stuff for us. Chances are a CFO is probably not going to make that much difference for you at that, when you're that small of a company. But even if they do make that kind of a difference, you're going to be paying a CFO their salary when they're going to be spending 10% of their time doing CFO stuff, 20% of their time doing accounting or controller stuff, and then 70% of their time doing bookkeeping. Now, to give you an idea of what you should be paying these roles, a bookkeeper you should be paying somewhere between 30 and 50,000. You may find some cheaper, you may find some that you'll pay more for, but somewhere between 30 and 50,000 is what you're going to be paying for a bookkeeper. An accountant, accounting manager, staff accountant, they're going to be somewhere between $50 and $90,000. You may even get up to $100,000 for a really good accountant or staff accountant,
Yeah.
but that's about the range that you're going to be looking for there. A controller, at minimum, you'll be paying $85,000, like straight out of school. They've just got their CPA. You might get them for $85,000, but they will be paid between $85,000 and $150,000, $160,000. A CFO will or should be paid somewhere between $120,000 and $240,000. That's what you should expect to pay for these roles. So I want you to now, take this back a step. If you're paying a CFO 120 grand, you're at the bottom end of the spectrum, and they're spending 70% of their time doing something that you could pay someone $40,000 a year to do, then you are wasting your money. And unfortunately, the person that should be telling you that you're wasting your money is the person that you're wasting your money on, the person that you're paying to do this. So no one's going to tell you that you're wasting your money.
Yeah.
It's a really unfortunate situation that a lot of startups get into. On the flip side of that, if you find a CFO and you're able to pay them $70,000 a year, then one of two things have happened. Number one, you found someone that is completely unqualified for what they're doing and they're not really filling the role of a CFO. Or number two, you found a unicorn. Somehow, some way, this person is willing to take a much lower salary than what you should really be paying them, and they're still giving you the service that you want to get from a CFO. There aren't many unicorns out there. They exist, but they're not out there very often. So just to be clear, I don't think that anyone should be looking for a CFO until they really, really need it. Every company should go through a process of hiring as the company needs. Now, I'm gonna touch on just real quick because I know that we're almost out of time. When do you hire these people? It's going to be different for different companies. Some companies are going to need a CFO faster than other companies. But what I will say I've seen as the biggest factor in why companies need to hire these roles faster than others is because their processes suck. If your processes are extremely complex, then you're actually going to put a lot more work onto your accounting and finance team. When you put more work onto them, then outsourcing it is going to become too expensive. You're going to end up hiring in-house, but these people are going to be overworked and overwhelmed. And because of that, you're going to have to hire a lot more and a lot faster than what you otherwise would. So work on your processes, your internal processes. Get that stuff dialed in as soon as you can. If you don't get that dialed in, then you're going to be spending way more on your accounting and other roles as well than what you really should. The other thing that I'll say is that when you work with your accounting team and your finance team, whether they're outsourced or in-house, I feel like the impression that I get from the majority of CEOs and business owners is that once they hire an accountant, that their books are just going to magically be done. The accountant's they're just going to wave a wand and everything's going to be done.
Yeah.
When you're the one that's out there with your Amex spending money willy-nilly, and how are they supposed to know when you went to Costco and bought a bunch of stuff? How are they supposed to know if you bought a TV or a big pack of bananas? They're not going to know that. And some business owners get really frustrated when their accountants are asking questions and they're saying, your books aren't done because you haven't given me this information. So I want to give you an example, and if my wife ever hears this, she's going to be mad at me for being crass, but I want to give you this example anyway. Your relationship with your accountant is like sex, and you're the woman in this relationship. Now, if you just lay back down on your back and do nothing, you're not going to enjoy it that much. it's not really gonna be a very good experience for you. You're not gonna get what you want out of this. You've got to put some work into this as well. You've all experienced this. If one person is doing all the work and the other person is just laying there and taking it, it's not going to be the best experience. And you can go to different accountants or different partners, if you will, and try it out with everyone else. But at the end of the day, some people might work a lot harder, they'll put in a lot of effort. But if you're just going to lay there and do nothing, you're not going to have the best experience. You've got to put in a bit of work. And when you put in a bit of work, you'll actually see that there's a huge difference in the output of that experience that you have with your accountant.
That that's the best example I think I've heard in a long time. To highlight, without saying names, Mike and I have been working on a client for probably about the last year, maybe year and a half, and this client has done exceptionally well. A very large franchise company that we've helped grow, and um, there was recently an individual that I just kind of talked to that invested into this organization, and when I told them who I was, I introduced myself. They had made a comment about the work that we had done. Um, Now, don't get me wrong, and we actually just ended our engagement with this client a couple months ago, but the comment kind of it bugged me for a couple. Don't get me wrong, and Mike will disagree with me on this, but I always try and figure out how we can improve as a company and an organization. And there were some things that I feel like we could do to improve to help our future clients. But the but my response to this individual who had made a comment about the work that we had performed was I asked him I asked him, or I told him to, I said, ask ask your new partner how many times in the last 6 months he or she had hopped on our accounting and finance meetings that we were having every other week, because the answer was zero. When we ended that engagement, did we find the financial situation better than when we had got into it? Absolutely. I would argue absolutely, 100%. Did we leave it as good as we should have? No, I would argue that we did not. However, there are things that we could not do because of controls that are in place and should be in place, quite frankly, for that company for us to perform some of those services. And again, like, this is just kind of a cherry on top. When we had one of our final meetings, um, the owner of this organization, who had not attended finance meetings and accounting meetings and projection meetings, who complained that our projections were wrong and that they weren't done correctly, which is subjective to whoever's asking or answering the question. But one thing that this individual did in this final meeting is he did not show up. And at that point, it was a telltale sign to me that the engagement needed to end, because we were being put in a light that was unfair to us based on the circumstances of that engagement. And I've actually never heard that example put more clearly. But I would also, like, with all of your finances, most business owners are actually not good with their finances. Most business owners suck with their finances, and I think Mike would agree with me on that. But that doesn't mean you can't or shouldn't do anything with it. And I say this repeatedly in a lot of different situations, and I would love to hear your, well, I already know your perspective, but I want to hear you say it. Our clients that increase their revenue the most, that increase their profitability the most, or that save the most amount of money on taxes, are the ones that we are communicating with on a consistent basis. And the ones that have the biggest troubles, the ones that always have the most complaints, are the ones that talk to us the fewest, or that we have the hardest or the most difficult time getting a hold of. Am I right? Do you agree with that?
100%. I think that as a business owner, you need to take care of your business. And
Yeah.
if you neglect any part of your business, if you neglect marketing, if you neglect customer relations, if you neglect processes, no matter what you neglect, that part of your business is going to struggle. It doesn't matter how many people you hire in that section. if you completely neglect it, it's going to struggle. And
Yeah.
unfortunately, most businesses will neglect their accounting and their processes. Those are the two things that get neglected. They're really good at going out and getting sales. They're willing to throw some money at marketing, but they continually neglect building processes or hiring people to help them build processes, and they neglect accounting and building the processes around accounting. And when you neglect these two things, that's what stops your company from scaling. You can be a startup, and you can work the 24 hours a day as an owner. Personally, in a startup and as an entrepreneur, I don't want to continue doing that for the rest of my life. So I build processes and hire people to make it
Yeah.
so that I don't have to work stupid hours. I don't have to be on every call working with every client and doing everything. But I've built the processes so that my clients can get the same, if not better, services without me being in every little detail of what's happening. And if you can do that, that's how you're going to be able to scale. That's the difference between $1 million company and $100 million company, as processes. If you don't have those processes, if you don't take care of every aspect of your business, then it's going to fall apart eventually.
Cool. No, I couldn't agree more. This is hopefully for all the listeners, this has been very valuable, kind of an education course on how accounting works in an organization. I would also add to this conversation that if you are in your startup phase, and I would argue that the startup phase is, 3 years or newer, maybe even 5 years or newer, doing less than $20 million a year. That to me is still startup phase, very much so. There's still lots of aches and pains. Consider outsourcing before you bring in house. Your costs are going to be far lower. It's going to force you to have the conversation so that you understand what's going on in your business, which is only going to help you excel above and beyond maybe that 5 year mark or that $20 million mark, when you do bring things in house so that you understand how things operate. But that would be my last and final plug. Mike, thank you as always. Thanks for being on. Thanks for all the work you do. Thanks for your friendship. For those listening, again, this is Brady Slack with Slackin' Off, where we do everything but slack off. Thanks for listening.
Thanks for tuning in to Slackin' Off with Brady Slack.